What happens when India's EV boom creates a new business opportunity? That is the key question behind the Dhoot Transmission IPO. Dhoot Transmission is an automotive component manufacturer. Its biggest business is wiring harnesses. Think of a wiring harness as a vehicle's electrical network. It connects different electrical systems inside the vehicle. But Dhoot Transmission is doing much more today. It is expanding into electronics, sensors, and EV related products. So, can EV growth drive this business? Let's understand the story. Who is behind Dhoot Transmission? Dhoot Transmission was incorporated in 1998. The company was founded by Rahul Dhoot. He continues to serve as its managing director. Rahul Dhoot has over 27 years of automotive sector experience. Over time, the company has expanded significantly. It started with automotive electrical products. Today, it has a much broader product portfolio. Its operations also extend beyond India. These include the UK, Slovakia, Thailand, South Korea, and Japan. The company also has institutional backing. BC Asia Investments XV Limited is associated with Bain Capital. It is another promoter alongside Rahul Dhoot. So, what do we have here? A founder-led business with private equity backing. But what does the company actually make? What does Dhoot Transmission make? Wiring harnesses remain its biggest product category. They contributed around 77.08% of revenue in FY26. The company also makes cables and connectors. It makes terminals, sensors, electronic controllers, and switches. It also makes several other electrical components. The company serves different types of vehicles, but two-wheelers are especially important. In FY26, two-wheelers contributed about 65.47% of the revenue. Three-wheelers contributed another 12.86%. Why does this matters? Because both segments are seeing increasing electrification, and that brings us to an EV opportunity. Where does EV growth come in? This is where the IPO story gets interesting. Dhoot Transmission's EV related revenue has grown significantly. EV related revenue was 16.19% of the revenue in FY24. It increased to 25.22% in FY25. In FY26, it stood at 24.17%. So, EV products now contribute roughly 1/4 of the revenue. But notice something important. The percentage fell slightly in FY26. So, EV contribution does not rise every year. The bigger question is different. Can absolute EV revenue continue growing? Electric vehicles need more electrical and electronic systems. That creates opportunities for component suppliers. These include wiring, connectors, sensors, and controllers. Dhoot Transmission is expanding into these areas. Its products include battery assemblies, DC-DC converters. It also makes onboard charging related solutions. So, the company wants more EV content inside vehicles. And this opportunity is not limited to passenger cars. Two-wheelers, three-wheelers are very important here. These segments are seeing strong EV adoption in India. But is this opportunity already visible in the numbers? Let's check the financial performance. The company has delivered strong growth in recent years. Revenue from operations was about 2,798 crore in FY24. It increased to 3,445 crore in FY25. In FY26, revenue increased further. It reached approximately 4,525 crore. That is around 31% growth over FY25. Profit has also increased. PAT was about 299 crore in FY24. It increased to 354 crore in FY25. In FY26, PAT reached approximately 397 crore. But there is another important number. The PAT margin has declined. It fell from 10.67% in FY24 to 8.7% in FY26. So, revenue is growing, profit is also growing, but profit margins have moderated. That makes future margins important to watch. What will the IPO money be used for? The IPO size is about 3067 crore. This includes a fresh issue of up to 1400 crore. There is also an offer for sale. The fresh capital will have multiple uses. One important use is debt repayment. The company also plans further expansion. It plans investments in new manufacturing facilities. Why is this important? Because higher demand needs more production capacity. As of March 2026, the company had 22 manufacturing plants. 2 more plants were under construction in India. Overall capacity utilization was around 74.26% in FY26. So, the company already has a large manufacturing network, but more capacity may be needed for future growth. But what are the risks? The EV opportunity sounds attractive, but it does not guarantee future growth. The company remains heavily exposed to two-wheelers. It also has significant three-wheeler exposure. Customer concentration is another important risk. The company's top 10 customers contributed about 80.93% of FY26 revenue, and there is a bigger concentration point. Bajaj Auto alone contributed approximately 31.84%. That makes customer diversification important. There is another factor to consider. Wiring harness still contribute more than 3/4 of revenue. So, the company is diversifying, but its traditional business remains very important. So, can EV growth drive Dhoot Transmission? The answer depends on execution. Dhoot Transmission already has a long operating history. It also has an established OEM customer base. Its EV product portfolio is expanding, and EV related revenue is already meaningful. At the same time, the traditional businesses continue to grow. But investors should watch 3 things closely. First, can EV related revenue continue growing? Second, can the company maintain healthy profit margins? And third, can it reduce customer concentration? So, this IPO is not simply an EV story. It is an automotive component business, and it is trying to benefit from vehicle electrification. The opportunity is visible in the company's current business, but future performance depends on execution. It will depend on EV adoption and OEM demand. It will also depend on capacity expansion and margins. These are the key factors to track. Especially while evaluating the Dhoot Transmission IPO, investors should read the IPO offer documents carefully. If you find this video useful, subscribe to our channel for more simple explanations. We cover important stock market and business news in easy language. Thanks for watching.
Thanks for watching. Please subscribe for more videos.